Hello and welcome. We'll continue with inheritance tax, and now we will look at a couple of reliefs. First of which is business property relief. I'll just share the screen with you as we'll read together. Here you go. As you can see on your screen, it is business property relief. Now, the business property relief, in the short we can call it as BPR, can reduce the value of assets by 100% or 50%. Now, the following conditions are given to classify a property as business property. The conditions are from A to E. If you could just write it down from A to C, first three are for, 100% relief will be available on first three. So A, B and C, 100% relief will be available on these three, and D and E, you'll only get 50% relief on them. Alright? Now, this is also mentioned just beneath that at the end of this note, so no need to write it down somewhere else. If you want, you can do it, but if you have a hard copy of these notes, then you can just write it down on the notes. If you do not have, then don't worry, it is already mentioned below that. Now, the relevant business property is a property consisting of a business or an interest, such as partnership shares in a business. So it will be a business property. So property will be consisting on a business or interest in business, such as partnership. Securities of a company which are unquoted. Now, the securities of an unquoted company which give the transfer control of a company immediately before the transfer. The control may be achieved by taking into account the related property. So you have some shares in unquoted company which is also controlled by you. So control may be exercised, it says, by considering related property, which we have seen in previous lecture. Right, and after that it says shares of, any unquoted shares, not securities, in a company. So any unquoted shares in a company which is not security. Now, securities include shares and other debentures and stuff like that, but when it comes to shares, the shares are just shares. So first three, if any of these three apply, then the relief would be 100%. Now, D and E, in the D says shares or securities of a company which are quoted and which the transfer control of the company immediately before the transfer. Again, it says control may be achieved by taking into account the related property. So if you hold some shares in a quoted company, that would be 50%, relief would be 50%. And after that it says any land or building, machinery or plant which immediately before the transfer was used for the purpose of business carried out by the company of which the transfer has controls. In this case as well, the relief would be 50%. And after that it says shares or securities on AIM. Do you know what AIM are? You probably have studied in F9, I think. Alternative investment markets, if you remember. Shares in alternative investment markets are also counted as unquoted shares. So you will get 100% relief if you hold some shares in unquoted company, only if you have some have control in them. It says business property relief available on percentage reduction in value transferred, 100% for assets within paragraph A, B and C above, and 50% for D and E. Relevant property for BPR purpose excludes assets of the business, assets of the company which were not used for the business. So if any assets which were not used in the business will not be included. Now it gives us some conditions for BPR in the next page. The BPR is only available if relevant property was owned by the transfer for at least 2 years preceding the transfer, so must have been owned for 2 years. Or replaced other relevant property where the combined period of ownership sets the property for at least 2 out of the last 5 years. So it must have been either owned for 2 years, or if you have replaced the property, then 2 years out of last 5 years. BPR is still available even if the transfer cannot fulfill either of the criteria. If the property was acquired, it was eligible for BPR. It is PBR, it says PBR, it's not PBR, it's BPR. It was eligible for BPR and the transfer was made on death. So if you cannot fulfill in any of the above conditions, then you will still get BPR if it says when the transfer was made, BPR was available and the transfer was made on death. As it says here, BPR is still available even if the transfer cannot fulfill any of the conditions. When the property was acquired, it was eligible for BPR and the transfer was made on death. Say for example, if Mr. A owned a property, and when he owned the property, BPR was available on that, but he died, so the property was transferred to his kids. In that case, this condition would fulfill, because this property, when first it was acquired, the BPR relief was available, and the transfer was made on death of someone. So that's why this condition would still be applied. Alright, now non-qualifying assets for PBR, it's not PBR, it's BPR, business property relief. BPR is not available if the business consists wholly or mainly in dealing in securities, stocks and shares, dealing in land and building, and making holding investment. So it would be investment property. So if it would be investment property, then business relief won't be available. If it is business property, business relief would definitely be available. Next one, our next relief is agriculture property relief. Now, if the property is used for agriculture purposes, then we will get agriculture property relief at the rate of 100%. Now, APR works like BPR in reducing the value being transferred by certain percentage before any exemptions. Agricultural property relief is given before business property relief. So first preference would be agricultural property relief, and the second one would be business property relief. Now, one important point in agricultural property relief is that 100% relief will be available on agricultural value. It won't be on market value. Please make sure you write it down somewhere, because in the questions, normally what examiner does is he gives you two values. One is market value and other one is agricultural value. Please make sure when doing the relief, when giving the relief, please take the agricultural value of the asset, of the land or whatever, but do not take the market value. If you take the market value, then answer would be absolutely wrong. Right? Please make sure you take the market value, because the relief will be available on market value. Then it says conditions for relief. What are the conditions? Own the property and have occupied it themselves for the purpose of agriculture for the 2 years before the transfer. Now the owner have owned the property and have used it for agricultural purposes, then you must have owned it for 2 years. Now if you have owned the property and someone else has used it for agricultural purposes, then it must have been occupied for the purposes of agriculture by either the transfer or the tenant purposes. So it is, the condition in this case is 7 years, at least 7 years before the transfer. So say for example, if you own the property and you used it for agriculture purposes, it was your land and you was using it, then in this case you have owned it for 2 years. Now if you owned it but you have let someone else use it for agricultural purposes, then in this case the minimum ownership is for 7 years, and then you will get the agricultural property relief. Alright? So these were some conditions for agricultural property relief. If the property transfer replaces the other agricultural property, condition will be still satisfied, provided the transfer has occupied the properties for the purpose of agriculture for at least 2 out of the last 5 years, or the transfer has owned the properties and someone else has used it for agricultural purpose for at least 7 out of the last 10 years. Now these are very, very important as far as P6 is concerned. These both reliefs are absolutely very, very important. Please make sure you know the conditions of these, know how to apply it, so that you can do it quickly, and you can know the rules, because it is equally important for theory and calculations. Now this is also theory as well. Like in the previous I think couple of lectures, when I was telling you some exam tips, that please make sure you concentrate more on the theory, although you have to concentrate definitely on calculations, but please give equal attention to theory as well. Theory is very, very crucial to pass this exam easily, because in these notes lots of theory is given, and it's not much, it's just 92 pages long, all notes are. So please make sure you know the theory, you know on the fingertips what are the conditions for APR, what are the conditions for BPR, which one is given first, APR is given first, where the business property relief is given 100%, where is it is 50%, and like that. Agricultural property relief is given 100% of what? Market value or agricultural value? Agricultural value. So like that, you know the rules on hands, on fingertips, then it will be very, very easier for you to pass. Alright, so that was our agricultural property relief. Right then, let's move to our question which we were doing in previous lecture. So this was our question which we were doing in previous lecture, where we were considering related property rules, diminution in value and all that, where we saw Laura and Brad was related properties because Laura is wife of Brad, and now the whole shares, and if we consider the related property, the percentage holding is 75%, so we'll take 290 per share value if we consider the related property. If we just ignore the related property, then Brad would only hold 30% shares, and if we take 30% value of 30% shares, per share would be £205, right? So we'll have to consider both of them, and we'll have to ignore related property, and we'll do not have to ignore in other case. So we'll have to take both cases. Whichever results in higher value, we'll have to take value of that, as I said to you in the previous lecture. All right. Now let's go and read the requirements. It says just ignore the capital gains tax. We'll just read the inheritance tax. In the first case, it says an explanation of inheritance tax advantages of making lifetime gifts to individuals in general. Now when it says in general, it means it is giving you absolutely free marks. You just have to copy the data from your notes and just write it down in the exam paper, because it is asking in general, so it is general knowledge. So, I would say it's free marks. As you can see in the requirements, part B, inheritance tax, explanation of the inheritance tax advantages of making lifetime gifts to individuals, and it is worth 7 marks. Oh my god. Now these are 7 marks, and these are absolutely free marks because it is absolutely bookish knowledge. It is exactly the same thing which is written in the notes. So you'll just have to say yeah when it is in the exam. So you'll be happy, I assume, because it is exactly the bookish knowledge. Then it says in the part B, in respect of the possible gift of 1500 shares in Omnium Limited to Danny. Now this was 10 marks, and it is asking us to calculate diminution in value. In respect of the possible gift of 1500 shares in Omnium Limited to Danny, 10 marks. Now this second one is worth 10 marks. Now if you just go above that in part B, and if we read the part 2, what the things he's asking about. It says in respect of the possible gift of 1500 shares in Omnium Limited to Danny, a calculation of the fall in value of Brad's estate which will result from the gift. Now we'll have to calculate the fall in value. Then in the second portion, it is asking a detailed explanation of whether or not the business property relief would be available. So we'll have to consider whether the business property relief is available or not on the gift, in respect of the gift, and on the assumption that it would be available, the manner in which it would be calculated. A brief statement of any other tax issues arising from the gift which will need to be considered. Now this is gift of the shares, right? Now when it is gift of the shares, we'll have to see if it is quoted shares or unquoted shares, and if it is quoted shares or unquoted shares, does he have any control? Now when we're considering the control, we know we can include the related property. Now he does have control, so the shares he owns, he does have control in the shares. Now another thing is that how long he has held the shares for. That is another condition which we have to see for business property relief. If he has held the shares for 2 years, Brad was given his shares in the company by his wife on 1st of January 2012. Now the minimum ownership period is, I think, also fulfilled. Alright, so these were the conditions which we will have to see. Which shares he owns, how much, how long, what's his percentage of holding in the shares in the company, and all that. So when we see, this is also absolutely free marks, as you can see. It is also exactly the same thing which you have just seen. Alright, so let's go to the answers to read if it is the things which we are talking about, or it is a little different. Let's go to the answers. it says inheritance tax. The inheritance tax advantages of making lifetime gifts to individuals. Now please pause the video here as you can read this answer. If you have the exam kit with you, BPP exam kit, then you can read it when you have time. But if you do not have exam kit, that please make sure you buy one, because without that you are not going to pass the exam. I'm telling you, practice is absolutely vital. Please make sure you pause the video and read this answer. I assume you have done it. Now let's go to part B. In respect of the possible gift of 1500 shares in Omnium Limited to Danny, fall in value of Brad's estate. Now we'll have to calculate the fall in value, and we'll have to calculate from both ways, one with related property, another one is without related property. Now it says related property included and related property ignored. Now if we include the related property, excuse me, then we'll have to take the shares of his wife as well. So the total holding would be 75%, and according to 75%, per share value would be £290 per share. And how many shares he held? He held 3,000 shares. So his total value would be £870,000. Now, if we ignore the related property, although he owned the 3,000 shares, but the value of shares would be less than that, because his percentage would be 30%, and value of shares is 202%. That is ignoring related property. Now, why we are taking both ignoring related property and including it? Because we'll have to take higher of both of them. Whichever results in higher value, we'll have to take that one. Now we have taken the value before transfer, and we'll have to take the value after transfer, value of shares held after the gift. Now how many shares he has after the gift? He has transferred 1500 shares, and the value he hold after the gift is 1500. Now if we include the related property, now he holds 15% his own and 45% of his wife. So total holding is 60% now, and according to 60% value, according to 60% holding, value of shares is 240. Now let's go back to the question and check it if it is 240. As you can see here, 240, it is showing 240 where 51 to 60%. Now as his holding is 60%, so the value of shares is £240 per share. Now if we ignore the related property, how many shares he has got now? He has got 1500 shares, which is 15% of the company's shares. So his value of share would be 190 if we ignore the related property. Let's go back to the answer and check ignoring related property. That's 190, as you can see. 190 multiplied by 15%, so it is 285. Now ignoring related property and including it, the higher result of transfer is including related property, which is £510. The higher falling value of 510,000 produced by reference to the related property will be used, as you can see on your exam kit. Alright, so we'll take higher of these. I hope now you got the point of related property. Now say for example, if you would have transferred 1,000 shares to a charity, then we would also have included that portion as well when considering related property. Say for example, if you would have transferred 500 shares to national purposes, then we would also have included that. So all four exempt parties, one is spouse, other one is political party, national purposes and charity. If you have transferred to any of these, or if they hold shares in the same company in which you hold, then we will have to take into consideration, because they are part of the related property. Alright, and after that, as we can see, it is business property relief in notes in the kit, and it will be exactly the same thing which we have just studied on the notes. Business property relief will not be available if the business of Omnium Limited consists wholly or mainly of dealing in securities, stocks or shares. Now the thing is that although he fulfills some conditions, but the business which he is dealing with deals with the securities and the shares. Now the business, in order to get the business property relief, the first condition is that business must not be dealing in investments. Now as this is investment properties, Now we'll have to see that how many properties he holds in the investments, so in order to consider if his primary business is investment purposes. Brad must have owned the shares for at least 2 years at the time of the gift. This condition is satisfied as we have picked from the question. Business property relief will not be available unless Danny still owns the shares at the time of the Brad's death, and the shares continue to qualify for the relief. If all of the conditions set out above are satisfied, a business property relief will be available at the rate of 100% because Omnium Limited is an unquoted company. Alright, so that was our answer, and that was our business property relief and agricultural property relief as well. Right then, that's it for this lecture, and please make sure you do some questions as well from exam kit. Please do some questions so that you are not too far from the exams, and please make sure you keep doing some questions. In the practice and revision kit, there is, if you just see the first few pages of a practice and revision kit, especially for BPP, they have specified the questions as well. So they have given you the questions of inheritance tax separately, so you can just pick up the questions from inheritance tax and start solving them. So that would be easier for you as well. Now in the exam, when you're doing the practice of the questions, you might be thinking the requirement very confusing, because in each question, examiner is asking too many things. He's asking about inheritance tax, income tax, capital gains tax, corporation tax, value tax. So he's asking about each and everything. Please try to make sure that you divide the requirements into different portions. So whichever portion you are confident about, just solve that question. Just solve that portion. Now, for example, the question which we have just seen, it was an inheritance tax question. So in the part B1, he was asking about advantages of lifetime gifts. So it was very, very easy, and you can answer that without even looking at the question. So likewise, there could be other requirements as well which you can solve without looking at the questions. All right. Always read the requirement first. Read the requirement and then dive into the questions. Always divide the big question into small portions. Say, for example, if a question is started, the examiner normally gives you different portions of the question, so it will not give you a big question straight away. So it will divide the questions into different sections. In the question itself, examiner will say inheritance tax, capital gains tax, value added tax. So it will divide the question into different portions. Now, why is examiner doing it? Just for your own ease, so that examiner knows that this is a big question, so that when the student is reading the question in the exam hall, so he can just read the relevant parts and then read the relevant requirements, so that he can answer the question easily. All right, just to save the time. So that's it for this lecture, and we'll continue our inheritance tax in the next lecture. Next lecture would be our last lecture of inheritance tax. All right, that's it for now, and I will see you in the next lecture. Goodbye.